following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Robert in New Jersey. Hey, Robert, what's going on?
Hey, Tom. A great show. I've been listening to you for years. You got a great thing. I've been listening to you for over a decade. That's amazing. You've done a great job.
I appreciate it, man. Appreciate you growling and prowling out here with us.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Let's take a look at one of our quotes. This is by Maya Angelou. I believe the most important single thing beyond discipline and creativity is daring to dare. No doubt. Market-wise, let's take a look at it out here, folks. We get the Dow Industrials up 24, NASDAQ up 13, S&P's up 2.5, gold contract down 90 cents, trading at 1,200 even. Silver up 4 pennies at $16.20 an ounce. Platinum down $1 at 1,181. Copper flat at $2.67 a pound. Light sweet crude down 67 cents, trading at $50.88 a barrel. Bonds, we have the 10-year up 7 ticks at 127.04. 30 years up 7 at 159. Both cases, folks, they rejected lower price, had lighter volume. Bottom line, bonds continue to want to go higher. King dollar up 389 ticks at 96.37. Euro down, let's see, where is she? She's down 49 at $1.10, and the yen is up 46, trading at 120.16. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. If we go over to the world of the SPY, folks, what you have is this, okay? We take a look at this SPY, and the way this is set up right now is that you get a slow roll that's happening in the SPY. That being said, thus far, that is the only indice that is rolling. We have the cash S&P right now at 2101, and the magic number for tomorrow at the close is 2110. You're going to close into 2110. What you have in the S&P is that you're on the bottom of the trend, meaning the trend that had been going on since 2011. It had broke that trend first off in October, went back inside the larger channel, broke it again. This is the third time it's broken it. Bottom line is that the S&P wants to start heading down into the, we'll see how far it wants to basically go. But the bottom line is that that trend, when you take a look at that trend line, it is extensive. In fact, I'll put this trend line up for you right now, and you'll see how extensive it is, because the other indices haven't rolled yet. But the way this market is trading, I expect you're going to see that roll. In fact, I expect what we're going to see coming into the close out here is that you're going to have the S&P and the small caps are going to go negative. If we take a look at just the cash S&P first off, we put this back on a much longer term basis. We'll put it on a monthly basis. What you're going to see is that from 2011, that cash S&P, what's that? That's 2009. 2011. There she goes. Okay, 2011, that cash S&P was at 1074. That's what we've broken. So that is a monster. You get a break like that, and we did break it with conviction. Broke it with conviction. Came right back inside. Let me get this up. Sorry about this. We'll get that posted. I see. Interesting. Oh, sorry about that, folks. About that post in the den. I'm gonna have to reboot the den. We'll do that the first commercial. Bottom line is that what we have out here is this: is that you broke that trend Right now, the cash S&P is trading out there at the 2102 level. We'll see where that shake, rattle, and roll is coming into the close. Well, you go take a look at the NDX 100, and we use the 3 Qs. What you're going to see inside the 3 Qs is this. 3 Qs are basically going flat. Once again, they are trading at 108.62. And what you do have with the 3 Qs is this. So yesterday, what we had done is this. We had got to lower price. We got to 107.86. You did 21 million shares. That's light volume. Now what the 3 Qs have done, they're going higher with lighter volume. So what does that set up? That sets up another run lower. We get the jobs numbers that are coming in tomorrow, and I expect those jobs numbers are not going to come in where the market is looking for them to come in. The Challenger report came out this morning, and that Challenger report, folks, is an awesome report to wrap your head around. It always comes out prior to the jobs number. And inside that Challenger report today, you had basically not a loss of jobs, because there's been a net 300,000 coming in. But you had a dramatic, in the last 9 months, that is the most amount of jobs that have been lost. You know, of course, there's other jobs going to be made. And it wasn't just in the energy sector. The retail sector was there. So I expect what you're going to see out here is that those job numbers are going to come in light, and we'll see if, in fact, you know, what that does to the marketplace. But the way it looks like it's set up right now, I suspect it's going to set up that it's going to go after the lows of yesterday once again. The IWM. Now, the IWM yesterday, when we were going lower, had dramatically lighter volume. Well, guess what? Today, as we're going higher, it's even lighter. We've done 15 million shares. Yesterday, it came down with 22. That says the same type of setup, that it's going to go after the lows once again. Those lows that we're talking about on the IWM is 121.61. Gold contract. Now, this is where it gets really intriguing. So, you have gold hanging out at 1,200. We have the dollar in a confirmed ABC structure in the way up. We'll go through that, but the dollar took out its B point yesterday, took it out with volume. Bottom line, it's saying that the dollar wants to go to 101. So what we have here is this. The gold contract out here today traded from 11.95 to 12.08. It's at 11.99 right now. We did 122,000 contracts. Bottom line, it's still rejecting 1194.60. That's how this is set up. So coming into Friday is always dangerous inside the gold market, particularly because the dollar is at those highs. But it has held. Bonds. We go take a look at the bond market. What we have with the bond market is this. 10-year bond right now, 127.03. And inside that 10-year bond, what you've had out here this morning is this. A rejected lower price. We got to 127.12. Said, see you, don't want to be you. Had lighter volume, 660,000 in the contracts. Bottom line, bonds also want higher price. Now, King Dollar. We take a look at King Dollar, and what we have with King Dollar is this. King Dollar took out its B point yesterday. Took it out with volume. The B point that we were talking about was the January 26th high. That January 26th high in the dollar index was 95.85. Yesterday, took it out, had 57,000 contracts. Today, you get 36. You're up 434 ticks. Bottom line, that is setting up a 101 King Dollar. Now, the thing that's going to be amazing about that, if we go over just and take a look at the euro for a second, what you have inside the euro, of course, you get the King Dollar taking out the highs, you get the euro taking out the lows. That is going to set up the euro as par with the dollar, which is just absolutely wild. You know, so we'll see where that does shake out. What has happened is this: the divergence that we have inside the dollar versus the euro versus the metal market is this, and the broad market, is that the dollar, you know, the last 8 months, as the dollar has moved higher, market loved it. Dollar basically would move lower, you know, market couldn't stand it. Now what you have is that yesterday when the dollar took off topside, bottom line, market pulled back slightly. Dollar's higher today, market's flat. I expect what you're going to see coming into the close is that you're going to see that the S&P is going to sell off slightly, because I'll bring over the, you're going to see this future S&P. The future S&P, folks, is set up so cool. If I put this on a 10-minute, what you're going to see is this. All the volume, everything is on each one of these cells on the way down. It's pretty extensive. And when I'm talking about cells on the way down, I'm talking about for the last few days. What you're going to see here is this. The acceleration's down. Yes, sorry about this, folks. Got to get faster fingers here. Okay, so what we have is this. Thus far, you're up $3. Yesterday, you had that sell down. The first sell down is at 2085. It looks to me like 2085 is going to be game tomorrow morning on these jobs numbers. This is Tom O'Brien. This is TFNN. Dow's up 30 right now. Nasdaq's up 15. S&Ps are up 2.5. You stay right there, folks. We'll come right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, Nasdaq, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow Industrials right now up 29. You get the NASDAQ up 14. S&Ps are up 3. And as we do each and every Thursday at 20 past the first hour, we get our man, Mr. Andy Heck. Don't forget, folks, every Tuesday, Thursday, right here at TFNN, outstanding show Andy has, 5 to 6 Eastern Standard Time. And, of course, you can get all that programming at TFNN. We start live every morning, every trading day at 8 o'clock in the morning, go 8 to 6, right on your cell phone, TFNN.mobi. If you just like audio, if you want the video with Tiger TV and the charts, go to TFNN.com. Hit on the right-hand side, you're going to see a box that just says mobile devices. Hit that box, you are off to the races. Andy Heck, what's going on?
Hey there, Tom. How are you?
I'm doing great, man. Well, that dollar's going to the moon. The dollar took out the B point.
I was going to say, I mean, today the dollar versus the euro broke very briefly 110. You know, I mean, last May this thing was at 140.
I know, man.
It's a huge move.
The Amalfi Coast, there we come.
Yeah, well, it's going to be cheap in Europe, that's for sure.
Yeah.
But I'll tell you, I'm a little concerned about gold tomorrow, Tom.
Yeah, on a Friday. There's no doubt. It's amazing that it's held up with the dollar screaming higher.
I agree. And quite frankly, you know, the silver and the platinum prices are weak, and the historical levels, there's big divergences. And, you know, I continue to say the gold's too expensive, or platinum and silver are too cheap here. And given the, you know, the kind of trajectory of the dollar, it's hard to make a bullish case fundamentally for gold here.
Yeah, no, it is. There's no doubt, man. There's no doubt about that. You know, I guess the case would be, you know, I was thinking about this earlier today, folks. I've been thinking about it quite a bit, actually. So picture, starting on March 9th, the European Union is going to buy $60 billion a month, right? And that's going to go until September of 2016, and that's going to supposedly get into $2.1 trillion. So, well, watch this trade, Andy. I start thinking about this. I says, oh, man, what an easy – nothing's easy in the trading business. Okay, that's the wrong word. But I started looking at that. I said, so watch – what they're doing, folks, is that they're not only going to buy their own sovereign bonds, they're going to buy corporate bonds. So when I'm looking at that, of course, it's free money, right? And I'm looking at the free money, I'm saying to myself, well, that's going to be one of the biggest carry trades we've seen since the Japanese carry trade like years ago.
Absolutely.
Because
it's a free put.
It's free.
Right.
Well, what happens, folks, so check this out. You can basically, you're borrowing in Europe, you're buying in Europe, and they're going to suck all the bonds up in Europe, and they just come back and buy our treasuries. So the bond market itself is still going to go higher. It's like, man, oh, man. Now, that being said, what's the next step after that? Well, the next step after that is that, guess what? That gold itself more than likely is going to end up really being a currency, because in euro terms, gold is a lot higher versus dollars. Right. So the key, and that's what may be holding up physical gold, folks. It doesn't have to do with you and me. That doesn't affect us. Well, it does affect us owning gold because we're in dollars. So our dollar price could go down and the euro price could go up. But I have a feeling the only reason that it's hanging at 1,200 right now is that the Europeans are buying the physical gold. Do you know what I'm saying?
I think that's the only reason that it's here. I think you're absolutely right because of the low interest rates. I'll tell you, one other thing, if you look at this, I wrote an article of last weekend. It didn't get a lot of play because it's kind of out there. Yeah. About the Danish kroner. Okay. You know, the Danish kroner is the one currency now that's pegged to the euro. And
it's costing them a fortune, right?
It is costing them a fortune. And you know, the Danes went to the polls twice in the last 20 years or so to vote against being part of the euro. Yes. They want to maintain their sovereignty and their dignity and separate, but they're very tied to the German economy.
Sure.
Germany is, I mean, as Europe goes, Germany's probably the strongest economy.
Right, no doubt.
But the Danes have spent about $26 billion defending their currency. And they've also canceled all new issuances of government bonds in Denmark because they don't want to give speculators any more tools to speculate against the Danish kroner. I have to think that there's going to be enormous pressure for them to lift that cap and that thing to move. I mean, they're going to have a choice to make. Either they have to join the euro or they have to remove the cap because it's going to bleed them. So I call the article a Scandinavia in Denmark.
I love it.
But I think it's a real, look, we look back to what the Swiss did. The Danes are going to have to do the same thing. And it all goes to the same thing, Tom, and what you were talking about. In Europe, there's real problems. There continues to be real problems.
Yeah.
I mean, there's deflationary problems. There's other problems that belie everything, the high levels of unemployment, the immigration problems.
Yeah, political.
And so on.
They get
political problems.
Political, man. I mean,
absolutely.
Folks, the history of governments defending currency, they always lose.
Right. That's exactly right. That was my point. That's my point. They always lose because they're standing in the way of economics, of basic economics. Look what George Soros did to the pound.
You know what's amazing? So what's so cool about this, folks, is this. You always hear on a continual basis, don't fight the Fed, okay? So I'm sure that there's folks saying, hey, how can you fight a country? I don't know what the difference in the correlation is. I just know that a country defending a currency, they always lose. That's, the market just comes after them. Well, probably, you know what it probably is, folks? And this is how vicious the market is. It's probably our own banks going after them. So,
well, it is.
I mean, the other side of it.
No, it's not necessary. I would say it's more kind of big pools of capital funds, But who's executing those trades? It's the banks.
Yeah.
When George Soros goes and sells the pound or sells the kroner, he's not doing it, with the Danish central bank. He's doing it through J.P. Morgan or Goldman Sachs. Right.
Man, that's intense.
So,
right.
It is. It's going to be very interesting. It's going to be very interesting. And yes, I think that gold is being held up because of this situation in Europe to an extent. But it's feeling very heavy to me. Very lethargic.
Oh,
very
it is.
heavy.
Oh, no, listen, man. There's no doubt that it is. There's no doubt.
I think keep your eyes on silver. Silver breaks $16. You're going to see gold go down.
Yeah. Oh, listen, man. Coming into a Friday where we are right now could be a real problem. There's no doubt.
Crazy Friday, right?
Oh,
well, after the show tonight, I'm off. I'm going out to California. I have some business to take care of there tomorrow.
Oh, good.
So I'll be driving across the desert after the show is over, and I'll be out there this weekend. It should be I'm looking forward to it because it should be about 20 degrees warmer in the LA area than it is here in Vegas. How's the weather there in Tampa?
It's gorgeous. The spring has arrived. Come on down to Florida, folks. I mean, it's not only arrived, it's absolutely gorgeous. It's 74 degrees out.
That's a beautiful thing.
Oh,
it's still cold here in Vegas. We had. Remember, I took you up to those mountains near where I live. We had snow cover on them the other day. I mean, really beautiful. You can just imagine the skyline there with the snow-covered mountains. Just beautiful.
Oh man, they still have. I mean, New York, they closed.
Oh, New York.
Well, they should have kept the airport closed, unfortunately, because one of the planes just went off the runway. Right.
I saw it. Got very lucky. It didn't go into the drink there. It came. The nose was just over the water. I hate that runway at LaGuardia.
I don't know it, but short runways I don't like. Can you stay with us a second?
Sure.
Awesome, man. Andy Heck, Tom O'Brien. Dow Industrials right now up 37. You get the Nasdaq up 16. S&Ps are up 2. Gold is trading $11.99. Silver's at $16.19. We're going to be right back, folks.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow Industrials right now up 24. You get the Nasdaq up 11. S&Ps are up 2. We're talking with our man, Mr. Andy Hecht, and we are talking commodities. Hey, you know, Andy, this is kind of this is really interesting, actually. You know, I know we don't trade diamonds, but bottom line is that the amount of man-made diamonds right now basically have these world largest diamond producers totally flipped out. Because evidently what's happening is that they're going to, this is the first time they've got together in 10 years because in 2004, you know, there was a price fixing and all this, but what the story is all about is that the amount of man-made stones now have got so good that they can be passed off as real diamonds, man.
Wow, wow. And, you know, De Beers has that vault in London where they kind of basically play with the supply and demand for the diamond market for so many years. So if that's the case, and I'm sure those man-made diamonds are not coming out of South Africa, they're probably coming out of Russia.
Yeah. Oh, listen, we have one of the biggest ones right in Tampa, right down in Sarasota. Well, he was one of the first guys that figured this whole thing out. You know?
Yeah. You know, the zirconia. Russia's the biggest producer of zirconia in the world. Yeah. And they also are the biggest maker of industrial diamonds. And they're a powerhouse there, so it doesn't surprise me. I mean, it makes sense. Putin, he'll get money from anywhere these days. He'll take money from anywhere.
That's a fact. Hey, let's talk oil for a second, right?
Sure.
And I'd like to talk Andy Hall for a second because last night, it was last night. I was on the way home last night, and I hear them on Fast Money, right? They're all talking Andy Hall, and they're talking about what he's doing. It seems to me, I mean, Andy Hall is one of the smartest oil traders there are. And it's almost like when I heard that, and I says, you know what? This guy's basically got people on a string. He's playing them. And because why would an Andy Hall of the world turn around and tell people what he has?
Well, first of all, you know, it's Aston Beck management, and he has certain reporting requirements.
Okay.
You know, so the words didn't come out of his mouth. They were in the Aston Beck's monthly newsletter to investors, which was leaked.
To his own investors, okay.
Right, to his own investors. So, you know, you can't play too much with that.
No.
But Andy Hall, listen, it makes sense. What probably happened is, look, if you remember back last May, last April, he was still bullish on crude oil.
Sure.
But he was bullish on crude oil, but he was probably, you know, loaded up with some protection, some put options against his long-term longs, and probably had more of those. And when the price went down, his long position became short, because if you have a lot of puts on against a smaller amount of longs, you know, the delta increase. You get much shorter.
Right.
I think what he did is he closed those out. Yeah. And I think what he's doing now is he's not going long crude. He's going long the front. He's going long some of the deferred crude, or he's going long the front and short the back. Because the thing that Andy Hall knows and understands the most about crude oil is, whether we talk about supplies in the U.S., whether we talk about crack spreads, whether we talk about Brent versus WTI, if something happens in the world, crude oil is going to react.
Right.
Now, we're coming to the end of these negotiations with Iran.
Right.
The likelihood is there is going to be no deal.
Right.
That is that is the chance.
Sure.
You know, I would say that's 95% sure.
For sure, right.
Okay. So when there is no deal, Iran can do something. They can threaten the Straits of Hormuz. They can do all kinds of things. This will cause the price of crude oil to go higher. This will also cause the front to go higher rather than the back. I would think that if I had to, you know, put money on it here, I would think Andy Hall's buying the front and selling the back here. You know?
Yeah.
It makes sense. He can do it at such an amazing contango.
Right.
He can do it at 20%. Why wouldn't he do it? It's almost risk-free, and he gets a free call on backwardation. And if the backwardation comes, he's long as can be. So I think that this is the trade he's doing. It's very funny because, you know, one of the guys at Fast Money, who's a good friend of mine, he actually got in touch with me and asked if I could get in touch with Andy Hall to get him to come on the show. And I told him, I said, Andy Hall doesn't go on any show.
No, exactly. Well, you know what?
He's never going on any show.
They were all this is why I just said that to you. They were talking like they knew his portfolio. I just said, man, they don't know his portfolio. And you know, so now I'm glad you brought up the aspect of the letter, because so what happens with the letters, folks, goes like this. he has to disclose where he's at, but he doesn't have to disclose the other side of that, meaning that, okay, I'm going to put that letter out. That's what I have. As soon as it's out, bing, bing, bing. I got the other trades on, and they got a puppet on a string, right?
Right. You know, look. At the end of the day, he likes to be bullish. He is always bullish. He likes this market. He thinks it's going higher in the long run. He thinks that shale is a short-term Band-Aid on a growing population. He's a demographic kind of trader. Yes. He's a mathematical trader, but he is not just getting long the front month. He's putting a structure on. It makes sense. It's the same structure he put on in 1990, which he was suffering with. And then one night, Saddam Hussein walked into Kuwait, and I watched in 1 hour him make $400 million.
Oh my God!
In an hour.
In an hour, yeah.
Right.
That's what happens, folks.
Right. So look, he's a brilliant guy, and he's right. The downside risk in oil now is much less than the upside risk, in my opinion. I don't think oil's going anywhere, Tom. It's doing exactly. Listen, I've been saying for like a month now. I think that 50 is the pivot point.
Yeah, and listen, it doesn't have to go anywhere. If oil trades in $6 increments is insane for oil. That's huge.
Right.
Yeah, right. I mean, that's a reality. And in this morning, you had Rex Tillerson, CEO of ExxonMobil on, and he was so cool too, because what happens is that, he just looked at him. He says, "Hey, man," he says, "oil's not going away. Man, everyone's going to need energy. Always going to need energy." I mean, it was just so calm. And he's right. It's like, okay.
Well, Buffett is that the one that Buffett sold?
Yeah, it is. Yeah.
I mean, that's he has to come on and kind of say, hey, Buffett is not, the oil game is not a Buffett game.
No, not even close.
It's not his typical type of. I could sooner see him buying Dunkin' Donuts than oil. You know what I mean?
Yeah, he's got to eat his donuts and drink his Coke, man.
Right, cherry Coke. It's cherry Coke.
Cherry Coke, yeah.
Right, but look, oil is a tough business for a guy like Buffett to get involved in. It really is. Yeah. And the management there, it's a different kind of business. But Tillerson comes on because he wants people to know, hey, Buffett's selling our stock, but hey, he's selling it for whatever reasons. We're still going to be here.
We're going to be here. Families have owned us forever. Buy it, we pay a dividend. Yeah, no, it was interesting, and he was cognizant. It was interesting here, folks, for a very large company, one of the largest companies in the world. He was absolutely cognizant of, he was saying, well, listen, I'm not, going to stay here and pump it and get in trouble with the regulators. That came right out of his mouth. You know what I mean? It's like,
of course, of course. Yeah. Also, the other thing we have to remember, with the strong dollar, with the low oil price, the production costs for a lot of commodities have gone lower.
Yeah.
So therefore, the break-even bar has gone lower. I'm concerned. I think copper failed miserably this week up at 272. I think we're going to go take another look at 240 now.
Well, see, what's interesting about the aspect of the energy going lower, that is the miner's largest cost. The second one's cement. It's like
Well, it depends. It depends. For example, for aluminum, it's electricity.
Right.
For other ones, absolutely. Yeah. It's a huge input cost. So when it comes, by the way, gold mining companies also use a lot of energy.
It's their number one deal. That's what I understand. Gold is oil, then cement and steel. That's how it goes.
That ain't bullish.
Well, I don't know. I mean, the price is down, so that means that their expenses are less.
Their expenses are less. No. It might be bullish for some of the mining profits.
Right.
It's not bullish for the price of gold because it means that it can be pushed lower and they can stay in business.
Well, and what did happen, I had said to you, I was at that BMO conference, and the CEOs there, they know that it doesn't matter what it costs them to produce something, that the market can take it lower than that. That's their biggest.
Exactly. Because when it comes to gold, when it comes to silver, it's investment demand. And if you look at the fundamentals, you could spend all day long putting together supply statistics, demand statistics from industrial demand. But the oddball, the question mark in all of these markets, when it comes to gold and silver at least, is investment demand. If the investment demand is there, they are going higher. If it's not in years that it's not, it isn't. And right now, for some reason, the world isn't frightened.
No, they're not scared of anything.
Maybe if the Iran-U.S. European talks break down, you might see a spike in gold.
Yeah, and that's not even the biggest threat in the world.
Of course it isn't, but
you know. Funny. Yeah, right. No,
there's a lot of threats in the world.
No, totally. Well, listen, man, we appreciate the education. You, have a great show this afternoon. Have a safe trip, and we look forward to the show in an hour and 15 minutes.
Excellent.
Thanks, man.
Soon,
okay.
Take care.
That was our man, Mr. Andy Heckman. Folks, you can test drive Andy's newsletter by coming over to our website at TFNN. Go to newsletters. Go to trading newsletters. You see the Technomental Commodity Report right there. This is Tom O'Brien. This is TFNN. You stay right there, folks. So come right back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit tfnn.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Tom O'Brien.
Welcome back, folks. Dow right now is up 41. You get the Nasdaq up 17. S&Ps are up 2.5. If we look inside the Dow Industrials and see what's moving, top side of the Dow, we have Walmart as the leader out there, folks. That's up 99 cents, trading today at 83.57. You get Home Depot next. That's 129. Home Depot is a monster top side. IBM, that's the dead cat bounce. That's up 167. And you get Johnson & Johnson up 97. That's also a dead cat bounce. On the way down, Big Mac is the leader on the way down. That's down $1.37. Intel is down 37. ExxonMobil's down 38. And Caterpillar is off 36. We go take a look at the NDX 100 and take a look at the winners versus the losers and the leader versus the laggard. It is the biotechs. Vertex Pharmaceutical is up $6.92, trading at $126.97. Equinox is up $10 at $234. You get Illumina up $7.46. That's a biotech at $200. And Regeneron is up $15 at $4.28. This thing is just a monster. No two ways about that. That's putting juice into the NDX 100, taking it out of it. The leader on the way down is Apple. Apple's down 212. You get TripAdvisor off 137. American Airlines is down 57, and you got Mattel down 29. If we go over and we take a look at, let's go take a look right here at the. We were just talking the financials, and we'll take a look at the XLF. So inside this XLF, of course, the largest weighting structure inside the XLF right now is Berkshire Hathaway. Berkshire Hathaway is the top dog in there. And, you know, bottom line is XLF hasn't been able to get out of its way. What we had out here yesterday is this. Yesterday, you go lower with 38 million. Today, a high with 13. That, folks, is a nice setup for selling. So it looks to me like the XLF is not going to be able to make it to its high of that $25.14. We go take a look at a couple of them that are inside it. We'll take a look at JP Morgan, JPM, see what's happening with JP Morgan. JP Morgan right now is trading out at a price point of 62.02. That little baby, you know, looks like it's actually going to make it up to its highs. The high is 63.49. You know, the volume's dying on the vine out here, but it's like, you know what? You're right next to it. Berkshire Hathaway. We might go look at Berkshire, BRK/B, because that is the largest structure. And, oh, see, the problem is Berkshire. Oh, this is interesting. This is really wild, BRK. Because what we have out here is this. Berkshire has really, it actually broke. This is pretty cool, actually, BRK. What Berkshire did is this. Berkshire's at 146.17. This is the B shares. And what that has done, you know, there's been a consolidation going back to November 14th, but it basically broke down. You know, you're up today on 2 million shares. Berkshire wants to run to 132. So Berkshire Hathaway is the drag right now on the financials in general. If we go over to the XLE, we take a look at the energy sector, the energy select sector. That is trading down 40 cents right now, $78.25. That little baby is building cause for higher price. So this is after it's already got smoked, there's no doubt. But that is pulling back today, folks, with dramatically lighter volume. You know, so that looks to me like, you know, that wants to make a run to 82 before it wants to get into lower price. So that one in particular is going to be intriguing, particularly the next few days. Why? Because the S&P itself is the only indice that is on the bottom of the channel, meaning that it broke its upward channel. The NASDAQ hasn't broke the upward channel. The small caps haven't broke the upward channel. Most of the actually sectors inside, you know, the Dow hasn't broken the channel. S&P, you know, bottom line, something is basically weak inside there. Now, the largest weighting structure inside the S&P is actually information technology. So that is where that whole turn very well could be coming in. So we'll see how that does shake out. Let's go over and look at Apple for a second. Apple doesn't have to move that much, particularly because, you know, as Apple, and this is important to understand, as it continued to get to higher price, that continued to have a larger weighting inside the NASDAQ, because the NASDAQ is a modified weighting structure. So what did Apple do today? This is the second time it's done it. Apple came off its high. Well, first off, it made a high on the 24th of February with 69 million shares. It came off that high with 91 million. It's coming down with 52 million today. That's coming off the high with volume. That is dangerous, big time. It's only down $2, but yet it is the leader inside the context of basically dragging the NDX 100 down versus it up. Right now, the NDX 100 is trading at up 975 at 4453. And where the juice comes from, that's the good old biotechs. The IBB, folks, okay, is a monster. That IBB today, it's up $7.76. You're at 347. And bottom line is that there's some juice behind this move, you know. So, you know, well, let's see, 1.8. It's not more than a swing point, but the bottom line is that you're over the consolidation that it has been in the past 5 days. So we'll see where that whole thing is shaken out. One of the main movers that used to bringing that up was Gilead, and Gilead's going nowhere. REGN is basically one of the ones that accelerates that up in a very large way. So we'll see where those biotechs, how long they can hang up at these highs. Walmart, we're going to take a look at Walmart. What we have with Walmart is this. Walmart came off its highs. Now, this one's going to get interesting because of the fact that, you know, cheaper gas should basically get more things still sold at Walmart. But what happened, Walmart made a high of $90. We put this back a bit. So first off, it made its high. The high that was generated out there was January 13th. Came off to $90. Goes straight down to basically 82. You know, there's a gap on Walmart, folks, at 78.65. That gap's going to get filled. We're way too close to that gap right now. You got to remember something. Once you're coming off highs, and there's gaps underneath equities, if you have a gap underneath an equity, find out where it is, folks, because that is what the equity's going to go for. And in Walmart's case, it didn't make it the whole way. What it made it, and this happens a lot, it made it into the bar when it gapped up. Then it'll build some more cars, and you'll see that baby get into the bottom of that gap, which is 79.44. This is Tom O'Brien. This is TFNN. You stay right there, folks. We're going to be coming right back. Dow right now is up 44. Nasdaq's up 16. S&Ps are up 3.5. We're going to be right back, folks.
The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Sam in Irvine, California. Hey, Sam, what's going on?
Hi, Tom. How are you?
Doing great. You having a good day out there?
I am having a great day. Thank you very much. I want to preface by saying that I'm so grateful to you and TFNN for you to assemble such a great people, such a team to help the small investors like myself.
Well, we appreciate you growling and prowling out here with us, Sam. Thank you so much.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. And if you're up in that northeast, that snowstorm, be safe, folks. This is by an unknown writer. Dare to believe. Market-wise, let's take a look at it out here. We had the Dow Industrials finish up 38, NASDAQ up 15, S&P's up 2.5, gold contract down at $2.80, trading at $1,198 an ounce. Silver up 3 cents at $16.19 an ounce. Platinum down $1.85 at $1,180 an ounce. Copper flat at $2.67 a pound. Light sweet crude off 65 cents at $50.88 a barrel. Bonds, we had the 10 and the 30-year both reject lower price, had lighter volume. They end up being flat. 10-year actually went up 4 ticks at 127.01. 30 flat at 158.22. They both want higher price, folks. King dollar up 414 ticks, 96.40. Bottom line, yesterday, King dollar took a B point out. It took out its January 26th high with volume. That's setting up a 101 King dollar. So coming into Friday, tomorrow, inside not only King dollar, we have the jobs numbers. Bottom line, when you look at the metal market, we'll see how gold reacts and silver reacts tomorrow. Because what has happened is this. Dollar, wide price spread, accelerated volume. Yesterday, you had some fall through today, and they still didn't whack the gold market. Coming into a Friday, we got to make it by Friday. That's the real bottom line here. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. Now, let's go over the world of the S&Ps. We'll take a look at the SPY right now and see what we have happening out here. So, actually, we're going to take a look at the cash S&P because tomorrow, folks, what we have is this. You have jobs numbers that are coming out tomorrow morning. The Challenger report that came out today, and by the way, the Challenger report, folks, is an awesome indication of where we are. John Challenger himself, we would see if we can get him on. Bottom line is that this comes out earlier. It's a no-nonsense deal about how many jobs were made, how many jobs were taken away. It is definitely different than the jobs report we're going to get tomorrow, but it gives you a nice indication of what's going on. And what came out in the jobs, the Challenger report this morning, was that you had a lot of lost jobs in energy and retail. So we'll see where this baby does shake out. I expect what you're going to see is that the jobs number is not going to come in where many analysts think it is, meaning we've had a huge acceleration in jobs the last 3 years. This energy downdraft is going to affect it. No two ways about it. In retail, he was bringing up the aspect that retail was laying off tremendously. He was also brought up the aspect that what's going to be in these numbers is that Radio Shack went bankrupt. So a huge amount of people got laid off right there. S&P. So cash S&P, this is what we have. The cash S&P right now is trading out at a 2103, 2101.89. A close under 2110 tomorrow indicates that you are still in the lower end and you broke the uptrend on a channel basis from 2011. And when we broke that, folks, what we did is this. This is where the probability goes much higher, and this is what it is. If we take a look at this S&P and you bring it back, what you're going to see is that this uptrend, basically, you can make the argument that it started in November of 2012. The larger one, I think, my take is that we really started in October of 2011. 2011, the S&P is at 1074. It's doubled, right? Without a meaningful correction. That's the real bottom line. You had a couple. We went from 1419 down to 1306. That was in 2012. Then we went to 1474 down to 1359. That was also in 2012. Other than that, bottom line, the biggest pullback we had since then was in 2014 when we went from 2019 down to 1820. That was a couple hundred bucks. Okay, that being said, that downdraft that happened in October was the first time that we had wide price spread, accelerated volume, breaking the trend. And when you have wide price spread, accelerated volume, you break a trend like that, most times you always go back up and try to get inside the trend again. Well, what the S&P do? That's exactly what it did. It went up and tried to get inside it, then did get back inside it. It got back inside it the week of November 3rd. It stayed inside the trend from November 3rd up until December 2nd, so 4 weeks. It gets back downtown again, huge volume again, stays down there for 2 weeks, goes back topside again, December 22nd. It stays up there for 1 week, comes back downtown January 19th, gets up there and only stays there for 2 weeks. Now we're back down on the other side of that trend. We'll see how this baby shakes out tomorrow. My take is that what you're going to see, here, I'll bring the future up so you can kind of see this, how this is shaking out. So that's the cash S&P. What happens with the cash S&P is this. The cash S&P does not trade. All 500 stocks have to trade in order for the cash S&P price to get generated. The reason that that's so important to understand is this, is that the futures themselves can be manipulated by large traders on a small basis, meaning small time-wise, okay? Whether it's an hour, 2 hours, 20 minutes, 30 minutes. You get large operators throwing 200 contracts, either buying or selling. You're going to basically get accelerations up or down. The cash S&P, different ballgame, because all 500 stocks have to be traded in order to get the number. When we take a look at the actual futures of how the futures been trading the last few days, what we have is this. The futures this is the E-minis. The E-minis are having a heck of a time getting over 2103. We got to 2103.50 today. Yesterday, you were at 2103.50. The prior day to that, we were at 2113. That being said, what you also have is on the way down at 10:30 yesterday morning, you get 2085. That's wide open, huge volume down there. This morning, you have 2093, same deal, huge volume down here. And what that sets up is that it sets up at least a test of that lower area. The NASDAQ composite, the NDX 100, the Russell 2000, all of those are still in an uptrend. They have not rolled. Bonds, what do we have with bonds? You get the 10-year, the 30-year, both want higher price. Both of these structures, what they did out here today is this. They got into the swing low of the last few days. They rejected the swing low. They closed at their highs. That is saying that they want to go after the swing points from December 26th. And if that's what you have, what you're going to see here is that you're going to see the aspect that as they go after that baby, that more than likely we'll see whether they get juice behind it. But that's saying to me that they actually want to go to the high, which is that January 30th high. That's saying bonds are not done yet. Now, King Dollar. And here's where this divergence out here. The market has loved King Dollar going higher. That's for the last 8 months. What we've had thus far, King Dollar yesterday took out a B point of an ABC structure in the way up, took it out with volume. So what we had with King Dollar, as we were going through King Dollar each and every day, there was two separate benchmarks. You had the benchmark that it took out yesterday, which was the January 26th high, and then you had the benchmark of the February 3rd low, because the February 3rd low, it was 93,838, and that's where we came down with volume. Bottom line, what does it do? It goes topside, takes it out with volume, follows through today with price. Volume also was good, 37,000 contracts. We're at 96.40. What this is set up is that this little baby is a confirmed ABC structure into the 103 area. So what does it mean when it's a confirmed ABC structure? What that means, folks, is this, is that your probability that you're going to get a 1-to-1 price projection is pretty good, okay? What you can get is, because if you take it, the B point out with price and volume and wide price spread, which we got, most of the time you're going to get a 1-to-1. You can get something more than that. The divergence is that the market yesterday basically pulled back. The market today was flat, and gold didn't get smoked. So tomorrow is going to be a monster day out here. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll come right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Check out the new look of Tiger TV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of Tiger TV, then visit TFNN.com. Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow Industrials finished up 38. Yeah, the Nasdaq up 15. S&P's up 2.5. And as we do each and every Thursday at 20 past the second hour, we got our man, Mr. Basil Chapman. Don't forget, folks, Basil has an outstanding show every trading day right here at TFNN, 11 to 12 Eastern Standard Time. Get it right on your cell phone, tfnn.mobi. You want to see his charts, Tiger TV, go tfnn.com. On the right-hand side, you're going to see a box that says mobile. Hit that. You're off to the races. You also got a great newsletter. It's the opening call. The way you test drive it, go to TFNN, newsletters, trading newsletters. You see the opening call. You can test drive it 30 days absolutely free. Basil Chapman, what's going on?
Hi, Tom. How are you?
Good, man. Hey, so did you guys miss the snow, get the snow on this one?
I just missed it where I am.
Thank God.
Thank goodness. I'm now tired of snow.
Oh, man. I'm telling you, pretty intense.
It has been intense, yes.
Yeah, no doubt.
Actually, I must say, out of all the winters, the actual removal of the snow has been the easiest because it's been very light, slow.
That's good.
The night before last was a little bit wet, but only an inch. Not a big deal.
Okay.
But it has been light, and that makes a big difference because if it ices up, then you're in trouble, and that's what we're trying to avoid, and we have.
No, that's awesome. So I believe we're looking at the Dow Industrials here, right?
We're looking at the Dow, as I usually show you, and this is very interesting. Normally, once we make a leg E and then a peak E, when in the Chapman wave, what you look for is the lowest, most identifiable low bar. In this case, it's the low from the 2nd of February at 17,034.
Okay.
And then you merely count each successively higher peaks. When you get to the fourth highest peak, that's what I call label A, B, C, that's D, the fourth highest. That's where you get somewhat cautious because it's from that fourth highest peak. Your objective is to try to get to that fourth highest peak, and then you've got to be somewhat cautious because that's where other things can happen. It turns out that just for 2 days it went sideways, and then we went to that fifth highest leg, which is E, and that was on the 2nd of March. So a month later exactly, we go where? From 17,034 all the way to 18,288 in the Dow. This is very interesting. Normally, I would have been setting up for my subscribers, I would have been saying, okay, this is time to short. But, and this I think is really fascinating, I would like very much to have all the indices in sync. And the one missing link was that the QQQ series, that's the NDX 100,
yes,
only went to a peak C in the daily.
Okay.
And the S&P in the weekly chart, I'm going to show you something very interesting. I'm moving over here to the weekly chart. This is the Dow. The Dow went to the leg D, and there are two little dojis. Well, we haven't finished. We have to wait for Friday.
Okay.
And you can see there's a dashed red line. I call this, what I call the Chapman wave up channel with an inside track. And that little dashed red line with the green line says a break above the up channel's outside perimeter would be very bullish, but between that dashed red line and the green line, that's where the price invariably turns around. Look, you can see every time it's gotten close or it's touched that line,
sure,
the market's reversed. However, and this, I think, is what I'm waiting for. And I spoke to you previously. Actually, I've been talking about this since December, that I'm waiting to see whether or not we make a leg D up in the S&P weekly chart. That's kind of what I've been waiting for. Everything else is in place. Some of the stocks have already started turning down. In my bellwether stocks, GE did very nicely. They went to a peak F. That's the sixth highest peak, and now it's pulled back. All of these are hinting that the market's really struggling. Even Apple in the NASDAQ has not been able to lead as it had before. And yet I'm still waiting because I would love to have the Dow and the S&P at least in sync to be able to get some kind of a sell signal. And I've been looking for it either the first or second week of March in the weekly charts. And all that the S&P has to do is go above 2,119.59 by 1 penny. At 2,119.60, I start to get my leg D, and you can see even here in the S&P. You see that red and green line? Look how the price invariably turned around there. So if history repeats, we should be able to, next week, I think it'll be next week, If it goes above that, that's where I can start looking at the indices as being ready to turn around and give us a move to the downside. And I wanted to ask you something. You and I look at the market intently, and we've done it for years, decades. You remember that crazy spike to 212.97 in the S&P when nothing else was trading there?
Right.
I kept waiting for TradeStation to correct the data. It turns out that there really were some trades at that level in the last 2 or 3 minutes of the trading day. They call them fat fingers, but it hit it. So if you look at enough charts, especially the intraday charts, invariably you'll find one where there's an aberration, there's a spike. The funny thing is, it happens so often that the price eventually comes down to that spike or goes up to that spike. Isn't that a funny? I mean,
it does. But Basil's talking about. As soon as I saw that, Basil, when I saw that, I said, "Oh man, I don't believe this," because that phenomena, folks, is that they go to it. That's the bottom line. So many times,
you cannot tell.
Well, many times I thought, Basil, especially in the '90s, right, that it's an electronic signal, folks. You know, now here, this is my conspiracy theory behind the deal, okay?
Okay.
But this is a reality, okay, to me anyway. That when those spikes take place, that is a great way for electronic traders to talk to each other, saying, "We got to get this up here. We got to get this up here."
Good point.
You know, and I've seen it. You've seen it. I've seen it happen just over and over and over. You know, when I say over and over again, I've seen this happen at least 15 times in the past. You know,
yes, well, that's the thing.
And that's insane.
Like for us, it's common because we've seen it so many times, but it's over a period of many years, decades.
Yeah.
Well, what's interesting is I kept looking at that, and you know what we did? We went for peak C in the weekly chart of the SPY. That's the trading vehicle for the S&P.
Right.
It's called the S&P Depository Receipts. It went to 212.24. It's 75 cents away from that magic number.
I know.
Isn't that interesting?
It's sick. I know, believe me.
So I'm anticipating we get somewhere close to that next week.
Yeah.
I'm thinking it's something like Apple comes out with whatever it is, and there's what I call a Chapman wave rogue wave. It's where if you also like me and know the ocean very well, and if you're at the beach and there's a sign that says high tide at noon, sometimes at 12:06 there's this one wave that never saw the sign, and splash, it goes all the way up the beach. And then the tide goes back down, and the tide has already turned, but there's that one wave that didn't see the sign. That's 212.97 is the rogue wave, and I think there's going to be a retest somehow.
I don't know if I don't think I've ever told the story, but on the air anyway. This is a crazy story, folks. But Basil remembered, I used to do the show. I had a place over the Vineyard, and I used to do the show from the Vineyard. This is in the '90s, right?
Yep.
And what would happen, folks, is that drive down the Cape. We had a boat. We'd take the boat from Falmouth over to the Vineyard. Okay. Bottom line, Caitlin and I, my daughter, right? There's a storm, and we wanted to get home and say, okay, we're going anyway. And you get a picture. We're always on boats, folks. But I knew it was really insane. Okay. So I put the ripcord on, meaning that if we do swamp, and we had a whaler, so this is safe. But anyway, put the life jackets on. Bottom line, we got a rogue wave. It was coming at us. It was like 16 feet. I says, oh my God, Kate. And the whale was so good, it would be a great commercial. Swamped us. We went down.
And you came back up.
And we came back up, went over. It didn't go over the wave. Went to the side of the wave and came back down. Wow.
Unbelievable.
Have a great one, man.
You too. Thanks, Tom.
You stay right there, folks. They're coming right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. 877-927-6648. Let's go to Jay in Boston. Hey, Jay, what's going on?
Yes, hi, Tom. I was just wondering about your thoughts on BIND, B-I-N-D.
B-I-N-D. Let's take a look at it. Thanks for calling, man. Thanks for holding. Appreciate it. So you guys have had an extraordinary amount of snow. I'm glad it's not snowing there for you right now. That's for sure, man.
Well, we're couple inches away from the all-time record, so in an odd way, we want to get 2 more inches.
Yeah, I don't blame you. Yeah, that totally makes sense. Okay, so let's take a look at it. This is a clinical stage nanomedicine platform. The company develops targeted and programmable therapeutics for active ingredients. The low is 513. The high is 1372. So let's see what we have here. Okay, so this is trading at 594 right now. Let me put this back for a bit. Now, do you own this? You're looking to buy it? What are we doing here?
I own it, and I was thinking of adding to it.
Okay, so what do you like so much about this?
Well, it's just with the therapy the way it's been going, I just.
Okay. No, I'm just curious because it's a really small company and the stock has only gone one way. I think they come public at what, $14 or something. Let me just see something. And the whole stock has only gone one way. Yeah, so they came public at $15. They just did a secondary at $5.75. Okay, if you're going for what this equity did is this. You spiked higher dramatically on the week of January 8th. Okay, stock goes from $5 up to $10.04. And it's like, okay, if you're going for that spike, that's one thing. What happened, Jay, is that even when it spiked up to that 10.04, it didn't take the swing point out, the prior swing point of 10.75. I mean, I wouldn't be buying more right now. I wouldn't be doubling down on the stock. Can it get to that level? Yeah. If you decided that you were going to double down on the stock, this is, let's see, it has a market cap of 120 million. They take in, I think it's 13 million. 1 second. Yeah, they're only taking in, well, they're taking in 31 million a year. So if you want to basically get more of it, the way to do it is this. So the way this is set up right now is that you pull back, and you pull back with much lighter volume than that spike, and that's where you are with it right now. Okay, so I can see why you're looking at it saying, okay, hold it, man. If I get that spike, I either in the money, get more money, whatever. Right? What I would do is this: I would make it prove itself first, because this is a highly speculative stock anyway. And the way that it would prove itself is that it would start running up to the $7.50 area. You'd start running there with volume, and you have wide price spread. If you get that, then the next pullback, then yes, you could buy more. But thus far, I wouldn't do it, not just to go to that spike. If that spike had taken out the swing point prior to that on November 19th, that would be a different ball game. But all that spike did is that stock had opened up at $7.40. It went to $10, and then it closed at $7.06. And that was with monster volume. So whoever's on the other side of that was selling that thing like crazy. You know what I'm saying?
Beautiful. Thanks very much. Appreciate it.
Okay, man. Have a great one. Have a safe one. And what does happen, folks, is this, is that when you have like this equity, some kind of news must have come out because the prior day was at $5. It spiked up, opened at $7, goes to 10.04, closes at 7. What it didn't do, what I've found is this: if you don't take a swing point out, particularly on an equity that has been going down for quite a while, if you can't take that swing point out, it doesn't negate a wide price spread accelerated volume day. What it does do is that it says it does not have to go back there. That's the kicker. It does not have to get back up to a 10.04. Whereas if you have an equity that takes a swing point out with volume and you have a high spike volume day, what does happen there is that your probability is that you're going to go back and test that area. And listen, I'll bring one up right now. Now, we own the stock in the Gold Report. I own the stock myself, but I just want to show you this because this one here is going to be really intriguing to see if, in fact, this will play out and how long it will take to play out. And this is what it is. It's Great Panther Silver. So Great Panther Silver is trading at 60 cents. The high for the year is 149. This is a real company, okay? So when we take a look at trading at 60 cents, this company takes in $54 million a year, right? So it's a real producer. That being said, like the rest of these gold, silver stocks, this has got killed, okay? Well, we just bought it. It's not like we're in a losing position here, okay? And we had made lots of money on it in the past because when this thing was running, we basically moved it out. When you take a look at this, what you have is this. It has a high volume bar at its highs, okay? And the bottom, the low of the high is 362. The high, where the high volume spike is $5. So inside that theory, meaning that you don't finish markets on highs, this equity is going to go back there. Time-wise, you don't know when. What you do know is this. What I see is that when it starts moving and goes on an uptrend, well, that's when you have game. So what you also have here is this. High-volume dojis love to get tested. So this equity here, something you want to keep an eye on in the future. No, I'm not even saying buying it. I'm just saying in the context, because I was looking at this today, I says, this is really going to be interesting, because this equity here in general has been just lying flat for, you know, basically 5 months right now at these lower levels. And it's like, you know, I was looking at it saying, okay, man, is this going to hit the lows of the high? And how am I going to end up trading it, you know, if it hits the low of the high versus the high of the high? Because the low of the high is 355, the high of the high is 504. The way that I will trade it is this. Well, just as I said to Jay, you're looking for wide price spread, accelerated volume. You're looking for a swing point to get taken out with volume. You know, so we'll see where that does shake out. Something that's very subtle inside of this is that this one did, when we went to the last swing high up here, when it traded at 149, you did 20 million shares, and it was 24 million it was going into. That's a good indication. You know, it's not like it was going up to that price point of 149 with dramatically lighter volume. It was going up there with some real juice, and in fact, it was going up there with bigger volume than it had come down on from the price point of 230 going all the way back in 2011. So there's a couple of these inside the gold market. And, you know, we'll see where that whole thing does shake out. One of the targets they wanted to look at Royal Gold, RGLD. And Royal Gold and Franco-Nevada, folks, are good indications of what's going to happen inside the physical metal market. The reason being is that they're both royalty companies. And, you know, when you look at Royal Gold, the way Royal Gold is set up right now is that Royal Gold is set up that it looks like the Royal Gold wants to hold up, and in fact, the metal market will hold up. Let's go to Chanel in San Francisco. Hey, Chanel, what's going on?
Hey, Tom, how are you?
I'm doing great, man. You having a good day out there?
Yes, I am.
Cool, man. What are we going to look at today?
Aeropostale.
Aeropostale. Let's take a look at it. This is one of the teen retailers. The low is $2.16. The high is $7.30. Okay, so let's take a look. So are you long this baby right now?
Well, you know, I bought this at 5, and I'm just holding it for quite a while. You know, I haven't done anything with it. So recently it had a pretty good move, and I'm trying to see if, you know, if I can enter at this time, or should I wait for a pullback, or what? Oh,
you're looking to buy it?
Yes.
Okay. So this equity here, folks, okay, you know, this has had some heavy-duty problems. So this equity is one-way trip, $32 down to $2. You know, I can see what you're looking at. You know, the month of February, it basically went from $2.30 to $4, and it had a little juice behind it. What I would do is this. I would wait. Let's see. That's on a daily. Yeah, I would. Yeah, I would wait for this. I would wait for 323. Where I'm going with Chanel is this. When this came off the, well, you see, you get this little gap down the bottom, but that doesn't have to get filled for years, really. There's a gap, folks, at 264 to 295. I would wait to the February 11th. You see that on February 11th, 360?
Yes.
That's where I'd wait to. Yeah, let it come back down there because that's the last time that it really had big volume. You know what I mean? And then then you'd be protected somewhat. You know, that you can put a stop.
You said 323.
360.
Okay.
360. It's the high of February 11th, Sunil.
Got it.
Okay, man.
Okay.
Have a great one.
Thanks
Have a safe one. Come right back, folks.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say You can.
Each and every time that the dollar ticks higher, S&P wants higher price. Each and every time that the dollar is ticking lower, guess what? S&P wants lower price. Dollar, the metals, and the S&P are going tick or tick.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. Join Andy Hecht as he shows you how to make money in commodities. The Commodities Hour, next on TFNN.
Tom O'Brien.
Welcome back, folks. The Dow Industrials finished up 38. We had the NASDAQ up 15. S&Ps were up 3. Don't forget, you just heard our man, Mr. Andy Hecht, is going to be coming up next with you, 5 to 6 Eastern Standard Time. So check that show out. It's an awesome show. And you know, this is I gotta walk you through this because this is pretty intense. It's pretty amazing how much if you get a product that people like, exactly what you can sell of it. The Snuggles, I guess they're pajamas, right, or something. I just remember them being on the infomercials. Okay, so check this out. A marketing company known as Snuggle Infomercials settled a state and federal claim that stuck consumers with hidden charges that almost doubled the cost of the product. This is a blanket with sleeves, a New York official said. The company lured consumers with attractive buy one, get one free offers, but didn't adequately disclose that additional fees and handling charges almost erased the promise of the free item. New York Attorney General said, though through confusing order process, consumers sometimes were sold additional items which they didn't intend to buy. So check out what they sold, though, these Snuggles, folks. This is pretty amazing. The New York-based All-Star Marketing Group, which also sells the Perfect Brownie Pan and the Magic Mesh Screen, agreed to pay $8 million to settle Federal Trade Commission and New York State probes. The company also agreed to change the ordering process and make it clearer. This agreement returns money to thousands of consumers in New York and across the nation they believe were buying items at a price advertised on TV but ended up with extra merchandise. So check this out, though. This is pretty amazing. They sold 30 million Snuggles. They enjoyed a cult-like following. Comedian Jimmy Fallon wore one during the late-night TV show and had been featured in many internet videos, including some mocking the product and parodying the commercials. Bottom line is that it's pretty amazing. 30 million, folks. How is that wild or what? Okay, so tomorrow morning, jobs numbers. What we had out here with the Challenger report today, Challenger report came in that the inside our job picture, energy, there was a huge amount of layoffs. Retail, good amount of layoffs. Retail had to do with the retail chains, the largest one being Radio Shack, going BK. Tomorrow, what I expect you're going to see out here, folks, is this. You'll see high volatility. The S&P wants to back down. Right now, the S&P itself is trading, is at that let's see, the future is running 2099. 2085 is a high volume spike from yesterday. More than likely, we're going to see that get spiked. That being said, what that also means is that if the jobs number comes in light, what you'll get is that you'll get an aspect that, okay, that would mean that they don't have to go up in interest rates. What do you have there? That would basically put more juice behind the bonds. Bonds want to go higher. And the amazing part, so check this out. In Europe, they're going to start their bond buying March 9th, Monday. So March 9th until September of 2016, this is what the plan is, they're going to be buying $60 billion worth of bonds every month. Those bonds are going to be both sovereign debt and corporate bonds. When you look at that structure, it's like, okay, if you're going to be doing that, how are our rates going to be going up? And so watch this. Not even the Fed can go up in them all they want. But what you're going to see, if you happen to be watching Tiger TV right now, I'm going to put bonds up across the world. Well, bonds up across the world right now, the 10-year in the UK is 1.8. France, you're talking about 0.6%. Germany, 0.3. Italy 1.3. What you're going to see immediately is that when the European Central Bank comes in and starts buying them, what does that mean? The supply is going to go down, the demand's going to go up, the price is going to go down. So it's already whacked out how expensive our rates are in correlation to their rates. That is saying to me, and now that's the first part. Second part gets even more intriguing. The second part goes like this. The carry trade aspect of it is unbelievable, because the way that bonds work, period, is that if I take treasuries, my own treasuries, if I take treasuries, folks, okay, treasuries you can buy in the market at a 10% VIG, meaning let's say a treasury is $1,000, I can buy it for $100, right? I can turn around and if I own treasuries, I can use the treasuries as collateral. The trade is going to be, for funds, are going to be, they're borrowing in Europe at zero or negative. They're coming to the United States and they're buying bonds. It's a no-brainer. What is that going to do? That's going to keep the rates reduced. So this whole thing about rates and how it's going to shake out is going to be really wild. Now, what does that do about inflation and metals? It's a wild card. The bottom line is that I suspect what we do have here is this, is that wage inflation, and it's about time, is creeping into the system right now. That's kind of how this thing is set up. That's what it looks like. You know, the inflation in certain cities in real estate is there. There's no two ways about it. When you take a look at New York, when you take a look at San Francisco, those numbers are astronomical that are out there. Bottom line, we'll see how long they can stay out there, because they certainly don't justify the amount of cash you can get out of any of those buildings on rents. What they do justify, however, is that when you're parking cash, you have a choice. Big companies have a choice. Do I park cash and give them $100 million, and it costs me basically, you know, maybe $50 million a year? No, not 50. Sorry, $500,000 a year. Okay, $300,000. Versus, do you park that in a building and a hard asset, and in fact that will go up, because this whole thing about the amount of cash that is out there is huge. What we still haven't had is the velocity of cash going through the system. And going through the system specifically means that you have hoarders, and the large companies out here have been the largest hoarders of it. The large banks have been the largest hoarders of it, and it's the Federal Reserve really that set that up. Because what the Fed should not be doing is paying interest on deposits. They're still paying interest on deposits. They had changed that in the financial debacle. I think what you're going to see, and whether it's 3 months, 6 months, that aspect is going to change. That would basically say to big banks, you can't hold your money here either. The banks over in, well, actually, I was going to say the banks in Europe would wish that they'd have that. But guess what? The banks in Europe can also use our own Fed and get small amount of interest in the money, when in fact, and this gets really bizarre, so check this out how bizarre this gets, they can be charging negative interest rates, getting paid for it and putting it and holding it at the Fed and getting money. Sick. You stay right there, folks. And man, Mr. Andy Heck's going to be coming up growling a problem with you. And don't forget, if you know you don't have the radio there, TFNN.mobi. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Whatever you want in life, folks, visualize it, step into it, take ownership of it, and fly with it. Thanks for being here. Have a great night, safe night. Look forward to speaking it right here tomorrow.